Okay, let's get started. Welcome to today's Cake DeFi Twitter space. It is May the 4th. Be with you. We are doing the Twitter space a day afterwards, after the day that we normally do it. It's a Wednesday. Reason for that is super simple. We had actually public holiday yesterday here, and I did want to spend the day with the family. I was traveling the days before, and so then I want to compensate for that and yeah, spend some time with the family. Went to the ice cream museum here in Singapore. I didn't even know this existed. Was quite cool, even funnier for my son than for myself. But yeah, that was the reason why we're doing that Twitter space today. Next week as well, we're also going to do it on Wednesday next week for the simple reason that on Tuesday we have a company function and it's not going to be as easy to do it on Tuesday. So next Wednesday as well. And then week afterwards, we should be back to schedule on Tuesdays. Topic for today. I have two topics and then I want to see what Fabio has. For me, I want to talk about our new product, which are loans slash your possibility to borrow against your crypto, something that's been in the news recently, simply because Goldman is also offering something like that, and Coinbase has actually used that function with Goldman. We offer that as well to retail. And then the other thing I want to talk about, which is actually the entire topic of the Twitter space today, is the upcoming Fed announcement for May, and what this announcement could look like and what this announcement could mean for the broader markets, obviously for crypto. And then what does this mean for how I personally position myself as an investor and how you can position yourself. These are a bit topics from my side. Fabio, you shared a couple of topics in Slack prior to that, things that you feel we need to address. Do you want to kind of give a bit of an overview on that? And then I think we dive in.
Yeah, hey everybody. Yeah, May the 4th be with you, and may the pump be with you. I hope we will see a pump sometime soon. The only things that I wrote down that came to mind was the US SEC will hire 20 employees in a special crypto division. I guess they're looking into regulations and setting up a task force. Then Solana was down for 7 hours with an overload of transactions, and maybe also noteworthy, there was a survey or a study that found out about 20% of all El Salvadorians that claimed the Chivo airdrop are now active users on the network. So there was, like, it's not perfect, not great, not terrible. There was a big amount of adoption through that Chivo airdrop, but of course not everybody will continue to use the infrastructure. These are maybe the points. And of course, the Fed meeting that approaches us in 7.5 hours tonight in Europe time. Is it tonight? In I think in America it's 14.
I thought it's at I thought it's at 9 a.m. EST. Is it at 2 p.m. EST?
I think so. I just Googled it. I'm not 100% sure if I looked it up correctly, but as far as I saw it, it's 14:00 in the United States and 20:00 in Europe. So 7.5 hours from now.
Okay, then I somehow had a bit of a wrong calculation. I thought it was going to be at 9 a.m. EST. Okay, then it's going to be my night time here in Singapore. Okay, cool. Great. Before we go into borrow slash loans and then the Fed, what's the community sentiment at the moment in a broader kind of scale? We had obviously stand-up update today. You shared a few ideas there. Yeah, what do you see kind of across the whole spectrum? Twitter, Reddit, Telegram, various channels. What's the sentiment that you see as a whole?
I guess boredom. Most of all, boredom. People are bored by the price action. I think since about end of January, mid of January, we are just going sideways. And if there is one thing that is more terrible than it is probably the most terrible thing, because when things are going up and everything seems to be great in the space, of course, the interaction and people want to talk about it, people want to read the news. When price is going down as well, because something is happening and you need to find the reason for why the price is going down. But if we are just going sideways, everybody eventually gets bored. They all come back as soon as the price does something like a 5 or a 10% pump. But as we are going sideways with little to no volatility, or just in a single digit percentage week over week, there is just volumes are down probably 80% in our Telegram chats, and on Twitter, maybe, I don't know, the interactions are, I guess, 50 or 60% lower than usual. So yeah, general sentiment is boring. And maybe like a few influencers like Plan B pushed out a tweet, and Plan B actually said bear market is confirmed. We already are in the bear market. The price and indicators are behaving as if the top was in April or May last year, and that we had this extensive period of being in a bear market, not overshooting on the way up, not overshooting on the way down. So just a consolidation period. I guess the question is, are we going to go? Is the bottom already in, or is the bottom still to come? Or at least that's what the question he asked.
Oh, that's interesting. And why did he change his opinion there? I mean, wasn't he always the one who was like, man, we're gonna pump. What changed? Or I mean, yeah, of course, the underlying like outcomes changed, but what was the trigger at the end where he's like, man, I was wrong, and now I'm like new opinion?
He made this tweet, and I'm going to share it here in the Twitter space right now, where he said the technical indicators like RSI and on-chain realized indicators show that Bitcoin went full cycle. We had a bull market top April 2021 and a bear market. In fact, we are still in a bear market. Question is the bottom behind us, similar to realized in 2012, or yet to come? This is the tweet he pushed out approximately 24 hours ago.
Okay. Interesting. And why? Yeah, I mean, okay, I'm the wrong person for all the astrology chart price stuff. But sure, I mean, okay. So no, he doesn't give much of an explanation on why. He just bases it on the past results and tries to predict the future based on past price action, basically.
Yeah, he does not give a full explanation on it, but I guess there is also, he kind of is with his back against the wall. There is nothing, like he was calling for a 6-figure Bitcoin, and it didn't happen. So I guess if the facts change, you need to change your mind. But he didn't give any explanation with it, so it's up for interpretation.
Oh, interesting. Okay. Okay, cool. Before we talk a bit about the market, maybe let's give a quick update. Yeah, we're in full kind of steam at the moment and releasing updates one after another. Some are very clearly visible to you. Some are new features. Some are new kind of ideas. Others you don't really see on the front end, but you definitely see it on the back end. If you don't see it on the back end, we see it on the back end. And one of those was the loan/borrow product. And I quickly want to explain the idea behind it and then how you can use this or what the functions of that are. In theory, in order to kind of cash in on profits, you basically have normally two ways. Either you just collect cash flow or dividends or interest from your investment, and that's how you then basically cash in your profits. The other one is you benefit from capital gains, which is just another form of profits. It's basically reinvested into the asset, and then you sell those capital gains, and then that way you kind of materialize your gains. If you, however, follow most wealthy individuals, they do neither. Many times people, let's say like a Warren Buffett or an Elon Musk or a Jeff Bezos, they own the majority of their net worth in crypto, in their company or in whatever they are kind of investing in. It's quite funny that I say crypto because Buffett has just been quite negative towards Bitcoin in the Berkshire meeting on Saturday. But if you look at Elon, sure, he has been selling his stock, for example, for his Twitter purchase or also for taxes. But what he normally does, and that's also what a Buffett does with his Berkshire stock, they take a loan against this asset. And the idea basically is that this asset appreciates more over time than the interest rate is. So if they're getting a loan, let's say for 3, 4, 5%, then over time, the bet is that if this asset appreciates more than 5% per year over time, so it's not going to do it every year, but over, let's say, over 5 or 10 years, they can basically take out something against this asset without ever having to sell. And so basically, that's how they have a very tax advantage or a very tax efficient way to kind of cash in on their gains. And that is why, for example, a Buffett has no interest in paying a dividend. Most people don't understand why he doesn't want to pay a dividend. Sure, his story is that he says he believes he can invest these profits better than their investors. But the other thing is, he's looking at this and saying, hey, why should I pay a massive tax liability if I pay myself a dividend? It's way easier to leave that in the company and then just take out a loan against those unrealized profits. And so, Tesla and Amazon and so on, they all do this kind of the same. This is actually something that Michael Saylor has been pushing for quite some time, where he says you don't sell your Bitcoins, you basically take a loan against them. And this was possible in various ways, but not super easy, not super smooth. And we launched that product now on our platform. So you can lock up DFI, you can lock up stablecoins, ETH and Bitcoin, and you can take a loan against that, and then basically cash out in form of stablecoin. A key thing I want to highlight here is normally you don't do this with a very risk on your margin. So you don't do this on an aggressive basis. You basically many times actually leave a super solid buffer. I think if you look at most wealthy individuals, they maybe take out 10% of their assets as a loan or something. So they always have enough buffer in case the asset doesn't perform in a certain year or a certain time, and then they don't get liquidated. So if you believe that DFI, Bitcoin, ETH, stable coins don't make so much sense to take out a loan against, but you could. But if you think that DFI, BTC, ETH are going up over time, then it makes a lot of sense not to sell them, but rather take out a loan against them. And we're actually looking into how you can utilize that money that you're taking out in a super simple way. So we are looking for off-ramps where we can then basically connect that product into. And that should be quite interesting for you as a user, because if we're connecting easy off-ramps there, then this would allow you to really cash in easily on your gains without having to sell the asset. Yeah.
Maybe let me give you 2 real-life examples on how to utilize a product in the real world. And I'll give an anecdotal story. So a good friend of mine, he joined the crypto space quite early, made good money, and he's worried about paying taxes. So he changed jurisdictions. He moved to Dubai. In Dubai, you need to pay your rent 1 year ahead of time. So, and Dubai has a fairly high rent, so approximately 2,000 for a decent apartment. So, meaning, in the end, you need to spend 24,000 US dollars to live there for 1 year. So if you have some crypto, you probably don't want to sell it, especially right now. We could go up. So you don't want to miss the gains for a whole year. You don't want to sell a half a Bitcoin or even more. So what you do is you practically, you take out a loan, you over collateralize because you're holding for the long run, and you put down your safety deposit for the rent, or you put down a year ahead without needing to sell. And there is another pretty famous guy, Dan Held. And for him, for example, he joined Bitcoin very, very early, and he practically utilizes a lending product. So he puts his Bitcoin into lending, and he lives off of the API he gets. So he doesn't need to sell a single Bitcoin. He lives from 5% that he gets on his Bitcoin a year. So these are 2 real life examples of how to utilize a product like borrow or like lending to never sell a single Bitcoin.
Yeah. One thing, again, consult with your tax advisor in your jurisdiction, but for many people, this is actually a very efficient way from a tax perspective how to approach this. So yeah, I think that's quite nice. Yeah, check this out, caketifa.com. If you're not a customer yet, definitely an amazing time to get started and get cash flow on your crypto or borrow against your crypto. Yeah, that's what I want to share on that. Are we ready to go into the main topic about the Fed? What could this mean for the market? Or is there anything else we left out in the meantime?
Yeah, let's talk about the elephant in the room, the Fed in the room, for sure.
Okay, why don't you summarize it? First, what is expected, what's happening, and then we kind of dig deeper a bit.
The juicy part, and where I'm especially interested in your opinion, Julian, is so we had the last Fed meeting was in beginning of March, I think, first 2 weeks of March, and everybody was expecting that they are going to hike. There was some discussion around how much, and pretty much the same thing is right now for the meeting that they have tonight. The Fed is expected to rate hikes, and everybody anticipates 0.5 rate hike, if I'm not wrong. And the question now is, are they actually going to do what they said they will do, which is my opinion. And the second question would then be, is it priced in or not?
Yeah, I think it's quite a good question, or two questions. As everything that the Fed has done so far, you have to be very clear there. They have left very little room so far on interpretation. They have been actually quite concrete, and they didn't really do much surprising. Maybe at the beginning, 6 months ago, when people were still doubtful that they were gonna, on the one hand, and there's a second part to that, that they need to offload their balance sheet. So a lot of the assets that they purchased over the last 2 years, they're planning to offload. So that's going to cause some pressure in the bond market. It's going to cause, and that's going to trickle into any kind of anything else that's risk on. But I think, except for the beginning when people were a bit skeptical, since then, they have been very straightforward. They have come out every single time and kind of reiterated their kind of plan. You're right. The market prices in a 50%, so 0.5% rate increase. So that means at the moment going from approximately 0.5% to a full percent. So another 100% increase in relative terms. And then the market is also pricing in the June meeting another 0.75, so 75 basis points, which puts it to 1.75%. And then in July, another 0.5%, which puts it to 2.25 before we go into the summer break. And that's when it's going to get quite interesting, because then the probabilities kind of start diverting. What's going to happen in the September meeting? What's going to happen in the November meeting? Quick reminder, midterm elections in the US is November 8th. At the moment, the party that's kind of pretty much ruling Senate, Congress, and the presidency is the Democrats. They are performing really, really terribly at the polls. And so they're going to need to do something in order to kind of get the polls up. And so it could easily be that there's quite some last minute action there. So that's, I think, why the market is not so sure about September and November. But generally speaking, the market is fairly certain about the 0.5%, the 0.75, and then another 0.5% over the next 3 months. The other part that people tend to forget, and that's where I think the 0.5% is priced in. I also think the 0.75% is priced in. I also think the 0.5 in July is priced in. What the market, in my opinion, is not pricing in is the offloading of the balance sheet. And that is going to be very difficult also to price in, because it's not 100% sure how the market is kind of taking up that excess liquidity that the Fed is pumping into the market, or basically offloading into the market, and then or it's actually reducing liquidity, if you want to term it this way. And so what I actually let's, before I talk about what I think is going to happen, anything that you feel is noteworthy to add, or other thoughts or things that you hear out there?
Maybe just something I learned last Saturday, and it's always important, especially if you're in the crypto space in this echo chamber, to hear a contrarian view and maybe a view from somebody that is outside of the space. And I listened to a talk from a famous German investment banker last Saturday, and he said the 5 most dangerous words for an investor is, "This time is going to be different." And I really appreciated that he brought this up, because here in the crypto space, our general opinion is this time is going to be different. This time it's going to be hyperinflation. This time everything goes to shit, or that's at least a lot what people think. And he kind of voiced a few things that he said it's actually not that different at all, because we had times of high inflations during the 40s or during the 70s, and in the end everything worked out in the end. So maybe all the death and gloom that is voiced in the crypto community doesn't always play out, and maybe the Fed is actually able to raise rates, and the market is can deal with it. So there is this possibility as well.
I remember that talk. I think it was fantastic. Also, quite a few surprising things in there. If we look at, and I think you're spot on, right? The market is actually expecting what, in my opinion, the Fed is very likely going to do. I don't think the Fed can afford to surprise the market here. I think this would be way too dangerous. If the Fed were to go out tonight, my time and your time, and said, we're only going to do 0.25%. To be honest, I think the market would get scared shitless because everyone would be sitting there thinking, what am I missing? Like, why is the Fed only raising 0.25? Are we in such a deep shithole that the market, that the Fed doesn't dare to raise rates? So I think that's really key. And then if the Fed raises 0.75, I think that's just going to be surprising the market. They haven't priced this in. I think bonds would drop dramatically. Because generally high interest rates, bond prices go down. So I think the Fed can't afford that. So what I actually think, the Fed's going to come out 0.5%. I don't think the market will react much. So I don't think crypto or stocks are going to react much, maybe even be slightly bullish because it is priced in already. Now, where I would start getting very cautious is that it's really tricky to kind of predict the offloading of the balance sheet. And that's just very, very difficult to kind of predict because that means you have to, it's difficult to model that mathematically, like modeling interest rates and how this impacts bonds, how that part impacts risk on assets like stocks. And then basically you can just say crypto generally just has a bit stronger moves than the NASDAQ, for example. This you can model quite well mathematically. But where it gets very difficult is actually to model supply and demand into the future, because a lot of emotions kind of play in there, and it's less of an emotion mathematical model. So I would actually expect that today, Wednesday, we actually see a green kind of stock market. We're going to see green crypto prices. However, the question then becomes, what's going to happen during the next couple of weeks? So just be extra cautious right now. If you see a small rally, let's say Bitcoin goes back above 40,000 again or something, and you're like, oh my goodness, like people were right. Like people can, like the market can handle the interest rates. It's just very, very dangerous at the moment to kind of go for these rallies, considering that the Fed is going to pull liquidity out of the market. It's going to offload its balance sheet. At the same time, any kind of debt out there becomes more and more expensive. The hurdle rate for your investments become more and more expensive. Buffett, and I understand that most people, especially in the crypto space, don't appreciate Buffett. I'm one of those people who appreciate Buffett for what he taught me, even though I don't agree with some of his thought process today, but that doesn't mean that I am not appreciative of all the lessons and all the kind of ideas he gave me. And I think a lot of them allowed me to kind of amass all that investment fortune that I haven't amassed, because I think the principles are timeless and the principles can be applied to any other asset class, as long as you understand that asset class, or you think you understand that asset class. And one of his famous statements is that interest rates are like gravity. So the higher interest rates, the stronger gravity is. And what happens with strong gravity, it pulls stuff down, and interest rates do the same thing. So just be aware that gravity is going to double maybe from today until tomorrow, right? So it's just going to get double. So jumping is going to get twice as difficult. And then on top of that, there's going to be an offloading of the balance sheet. And then on top of that, in June, gravity almost again is supposed to double. It's going to double by 75%. And then afterwards, it's going to be just a small kind of increase in gravity. But then if you go all the way down, we have basically done almost a 400% in, or 300% plus in gravity for any kind of investment, and it just pulls prices down. And so that is where, especially over the next 3 months, I would be extremely cautious in pouring something that has become extremely useful over the last 6 months, which is cash, and pour that is so useful into something that has lost a lot of utility, which is high risk, high volatility kind of assets as Bitcoin, and exchange those in the next 3 months. Do that if you're under exposed in crypto. Then I think you should definitely kind of trade a bit in, because I think it's also just as dangerous in betting on cash, because you may see a scenario, and it has actually nothing to do with the Fed, but you may see a scenario where, I don't know, maybe a conflict in Ukraine completely dissolves, and the supply chain issues completely dissolve, and suddenly this inflation fear completely dissolves, and that could actually trigger that the Fed is not raising rates as much. It could also be that inflation numbers over the next couple of weeks are actually not as high as expected. And then people suddenly say, this stuff seems to be working. The Fed can actually solve that. And with that, suddenly you have massive relief rallies. And that's just something that you have to be really, really cautious on if you start making extreme bets into one or the other asset class. And so I think that's really important, that you are diversified. And diversification at this very moment just means you're prepared for risk on coming back. You're prepared for risk off staying. You're prepared for inflation to go higher. You're prepared for inflation to go down. You are prepared if people are talking about a recession. You're prepared for people getting out of a recession. So I think it's a very, very important time right now where you don't make strong, convicted bets into one thing and rather go and say, you know what, whatever's going to happen over the next 3 months, like I'm prepared, I'm bulletproof. And I think, and that's just obviously me kind of looking into the crystal ball, the very first time we can start kind of reevaluating the roadmap ahead is probably July, August-ish, because that's when we then actually can look and say, okay, where are we right now? Did the stock market hold up that well as it did, as it has done so far? I understand most of the tech stocks, most of the NASDAQ stocks, they're down dramatically, right? 60, 70, 80%. But also, these are many times cash burning companies. They are, if they cannot raise cash, they are bankrupt. So, I mean, the question then is, how much of a company are they actually? If a company obviously has to deliver more value to the customer so that it can charge enough price in order to pay its employees and still return a profit while delivering value to the customer. And these companies are not able to do that, either because they're so young or because their business model is not strong enough. But if you look at the strong companies, yes, a company like Apple, Amazon, and so on, all of them lost a little bit on the market cap, but that's just because gravity is going up and people are expecting gravity to go up. So it's absolutely normal that these prices are coming down. This is more of a mathematical kind of reaction, less of an emotional kind of reaction. And so I think the Fed is sitting there and saying, hey, look, everything is happening according to plan. Bonds are going down, which is normal because I need to sell off my balance sheet and interest rates are going up. The solid stocks are just kind of moving down with mathematical like precision. Those companies that actually don't have much value because they're not producing any cash, they're burning cash. These things are getting dragged to the ground with the additional gravity. Crypto, which we can argue is underpriced, overpriced, fair priced, has been doing actually quite okay if you compare Bitcoin to the NASDAQ or something. So I don't think the Fed sits there and says any of an issue. And we can only reflect that, I think, at the end of July, beginning of August. And so that's kind of how I would prepare it for the next 3 months. Yeah, these are a bit my thoughts here.
It is super interesting that you brought up this point that there might be a possibility that everything goes as planned. So we have interventionism. So the Fed is its whole goal, why it exists, is to manage situations like this. And what the crypto space and Bitcoiners like to do is to say how wrong they are and how bad they are at their job, and they were at a lot of points. But I don't think those people have malintentions. They actually want to have a good plan, and they actually want to um, have good intentions. They have good intentions, but some of us, we never considered that they have a plan and the plan is actually going to work. And right now, there might be a bigger probability that this is actually playing out and they have somewhat control over the whole situation. So I find it interesting that this suddenly became a more probable scenario.
I mean, I'm not saying that, right? So I'm not saying that it's going to work out. And I'm not saying that the Fed is going to have this under control. And I'm just saying that I think making, for example, making such a judgment right now, in my opinion, is absolutely premature because we don't know, right? So that's what the Fed at the moment or the market is thinking at the moment. And so it's just that like going right now and saying, oh, you know what, this is going to work out. Like the Fed is going to do fine. It to me, it's the same mistake as saying this is going to be totally fucked. Like we're screwed. I think again here, I would just sit there and say, what's going to happen if this stuff works out? Well, if this stuff works out, anything that's risk on over the next 3 or 4 months is rock bottom, right? So basically, that means Bitcoin has gone down to, I don't know, 25,000 or something. Any kind of tech stock or something has completely gotten wiped out if they're not producing any cash flow. Anything that is producing cash flow, any really good company is probably not going to get touched much. I mean, if you just look at the coins, right, that we have on Cake DeFi. You look at DeFi Chain. DeFi Chain has been consistently the top performer. If you go on CoinGecko and you sort the top 100 coins, it's been consistently one of the top performers over the past couple of weeks. It's been outperforming Bitcoin, but I think now by 100% year to date, right? So it's absolutely insane. And the reason is very simple. Utility gone up dramatically. It's producing cash flow. More and more people understand it. It has had serious weeks of deflation because so much stuff was burned. Completely different than Bitcoin or Ethereum, which is down dramatically since the beginning of the year. But then it's by far not as much down as some of those companies that are actually burning cash, right? Bitcoin is not burning any cash, it's just neutral. But then you have companies that every day have to pay employees. Most of them actually have a negative gross margin, right? This is absolutely insane if you think about this. So negative gross margin meaning you actually have no margin. So you pay more to actually sell this thing as if you would just store it. And there's a lot of companies who have that. So they need to pay to actually sell something. It's crazy. So they would make more money not selling it, or they would lose less money not selling it. And the reason they would still sell it is because they're hoping that with this increased number of customers, they can raise more funds. And with this raising more funds, they can sell more stuff, paying, basically not really selling more stuff. They're paying you to take this stuff. And so with all that, they kind of obviously burning every hour more and more money, which is not what Bitcoin is doing. So, and this explains why are these extreme risk on assets, why they get totally slaughtered, and why Bitcoin and Ethereum has done relatively well, and why things that are on the cash flow positive side, solid things have actually outperformed the dollar. And so it's super easy to understand if you actually look at it from a fundamental standpoint. The dangerous part is just to kind of go there and say, oh, you know what? The Fed has everything under control. Or to say, oh, the Fed is going to lose this completely. Because that means you have to make stronger bets. If the Fed is completely losing this, right? So they are completely screwing this up. I mean, the contrarian bet right now is bonds, right? Which is absolutely bonkers in my opinion. But if the Fed is really losing all this, all the money's going to go into the dollar, it's going to go into US bonds, and these things are going to just skyrocket, right? I mean, people could probably like 50%, 60% on their money in the next 3 months if that contrarian bet is working out. It's something that Raoul Paul has been like very much favoring. And I understand why. It is a contrarian bet. And I am in bonds, but it's not a strong bet. It's just something where I'm like, hey, this is very contrarian. If this thing works out, massive return, upside is downside is expected, but not very much. So it's absolutely key. But if this thing works out as the Fed actually plans, then yes, we do see a slaughtering in bonds. We do see a slaughtering in stocks. We do see slaughtering in anything that doesn't have cash flow. But then we're going to see a massive rally in the summer or after the summer because people then sit there and say, hey, the slaughtering was not so bad. Like the economy didn't get destroyed. Yes, stocks went down 10, 20%, crypto went down 10, 20%, but it's not like crypto goes down another 50%, stocks go down another 80%. No more trust into anything. And that is a very, very different kind of scenario. And again, it can also be completely unexpected. Inflation numbers going down, Ukraine conflict completely disappearing, and bam, out of one day to another, Bitcoin is up at 50, 60,000. Stocks are completely rebounding. So expect anything at the moment.
What I see a lot in the community is people that said that they say, hey, if not crypto, maybe equities, but I don't want to go into equities because they are drastically overvalued. But there is one thing to consider. There's like it's super easy to break down a whole asset class and to say a whole asset class is overvalued, while in equities it's mainly tech stocks and mainly U.S. tech stocks. So U.S. as a region and tech as a sector that are overvalued. If you look into emerging markets or Europe or China, at the moment we are actually at decent levels where we are not overvalued at all. So, and I guess in the crypto space, it's the same thing. You brought up DeFi and DeFi chain in specific. We break down a whole asset class and we say crypto is down, but there are pockets right now that are like especially in the Bitcoin ecosystem, things like DeFi chain, where so much development has happened, and DeFi as a whole sector was undervalued through whole of 2021. And so right now there is still assets in the crypto space that are performing well, and so are in the equities, like companies like Berkshire, they do as good as ever, while tech is down, Netflix is down 70%.
Yeah, and I mean, I just look at any company right now that is boring, that, you know, those companies where like, man, I'm consuming this company every single day. This is not a company that, like, I don't know, gets discussed on Reddit or Twitter or Telegram or shilled as the next thing where you can make 100%. But it's that thing that's just so dead boring. And I mean, these things have done really, really well. Again, you can do a contrarian play here and say, you know what, I'm going to sell those companies because they've done so well, and I'm going to go into like the YOLO high risk, possible high return companies. It's I don't know. It's just something that I wouldn't do right now. That doesn't mean, I mean, I still own some really high risk, high rewards companies, ETFs, and so on that give me exposure to exactly that. But it's definitely more on the underexposure side, where I'm definitely overexposed on companies that are like, yeah, really, really boring. Like I'm not expecting more than 10% a year in this entire company, but I'm also not expecting this company to go down more than, I don't know, 10, 15% in a year. And I think if your investment portfolio is just up this year, you are doing incredibly well. I think there's nothing to complain about. So, yeah, let's see. That's a bit of my thoughts on that. I actually don't have much else to share. Again, I'm expecting 0.75%, 0.5% increase. I actually expect the market to be quite well. Be cautious if the market is doing a bit like is kind of having a bit of a relief here. At the end, it's really going to come down to the aggressiveness of the selling of the balance sheet and the actual impact of that. Yeah, and then don't forget, there's 2 more months right after another, and I also expect rate increases in those months. So gravity is going to go up dramatically, and there's going to be very few assets that can withstand that gravity. In general, short-term debt, so fiat and short-term bonds tend to do well when this gravity goes up. Yeah, they are not so gravity bound by interest rates, actually the exact opposite. So let's see. Yeah, these are a bit my thoughts. I got nothing else. Do you see anything else? Any question? Anything else we need to address, Fabio?
Maybe just to add on, it actually coincides pretty well with go away in May, come back in September, no?
With what in September? Sorry, I didn't. It blanked out. Either I had an issue, or I didn't hear what you said.
Go away in May, come back in September.
It does. But again, I don't. I'm not so much of a believer in this stuff. You can just have a a change of a macro situation, and that change of the macro situation, or unexpected improvement of inflation, or I don't know what. Look, don't forget. I think June, July, grayscale. I mean, look, we had this call with Saylor on Saturday, and he was like, he is super, super confident the Bitcoin ETF is going to happen, and he gave like a whole bunch of reasons on why he thinks. And just imagine if in June, July, the Bitcoin ETF is going to happen. Like, I mean, screw whatever you think, it's going to have a massive driver on the Bitcoin price, right? And then suddenly everyone is going to flip and say, oh yeah, the 100,000 are easily within reach. And I would agree. So I would just be super, and I mean, it's going to completely drag the entire crypto market with it, right? Because so many altcoins are trading versus Bitcoin, right? And people want to kind of get the Satoshi rate and stick to that. So yeah, I mean, someone that goes now and says, hey, I'm going to go into fiat, dude, that's like not, like, you're taking a massive risk here. Like, you remember, I explained that picture of this kind of purchase power casino, right? And you have to play. There's not a single moment in time when you cannot be playing. And so if you think I'm just going into fiat, no, you're playing on the fiat table. And that can be quite dangerous for your purchase power, because fiat is not purchase power. Purchase power is basically the percentage of your purchase power in relation to all the purchase powers that are out there. And so just because you're not losing in fiat in numbers doesn't mean your purchase power is not going down. I think one of the, I just want to give you maybe a nice statement here. Many people actually think money is the root of all evil. This is such a common statement, but I actually think it's completely wrong. I also don't think that the lack of money is the root of all evil, because we definitely don't have a lack of money. It's a lack of purchase power that is the root of all evil. And I think so much evil in this world happens because of the lack of purchase power of that person, or that kind of suspected or subjective lack of purchase power that that person has, that drives that person, that organization, into doing evil stuff. I'm not saying everything is kind of tied back to, or can be tied back to, the lack of purchase power, but I think a lot of evil in the world happens because of that. So don't forget that. So it's all about purchase power. It's not about the dollar amount. It's really about the purchase power that dollar amount resembles. So yeah, being invested in dollars right now, because go away in May, but remember, be back in September. It's basically playing on the dollar, euro, Swiss franc table, or whatever kind of fiat investment you're making. And this is, I don't know, it's like going all in on blackjack. I'm not sure if that's what you want to do. Cool. I think nothing else, Fabio, right? Then we're gonna call this a Twitter space. Fingers crossed for what's happening in the evening. And yeah, I just want to say thank you for tuning in. If you're listening to this in the recording, please click subscribe, follow us, obviously share, like this stuff. If you have any wishes for topics, then just let us know. If you are interested in working for the company, go to cakedefi.com/jobs. We are hiring literally in any department. So there's definitely something for you. Yeah, with that, I want to say thank you. Stay safe, stay healthy. Fabio, thanks so much for all the insights and value you're giving. And with that, I wish you a nice evening here in Singapore, a beautiful rest of the day in Europe, and a nice morning in the US.
Thanks everybody for tuning in. Next week, this whole thing, normally we do this on Tuesday. Next week is going to be on Wednesday as well, 12:30 Europe time, 18:30 Singapore time. Thanks everybody.